Welcome back. You're watching Young Turks. We're in conversation with Neeraj Arora of General Catalyst. You talked about the spate of companies that have gone public, and I think from the time that Paytm and Zomato listed to the time that we're now seeing companies like Ola, etc., list, and soon Swiggy and others headed to the Lal Street as well, that there's also now been a realization that the kind of valuations that you perhaps commanded in the private markets are not going to be the same as they are in the public markets, and understanding that difference and realizing that you need to put enough on the table for investors. Do you believe that that has, not just ensured that we've seen IPOs do well, but it's also brought in a fiscal discipline into the ecosystem?
Absolutely. I think taking a company public is a huge learning, for every company that has gone public, right? Because the public investors are ruthless, right? They look at every part of your business in a very, objective way, and they value you. They're voting with their own money, right? So there's less of emotion. There's a lot more of objectivity in that investing, right? And that is a huge learning for any company that has built over the years and then taken it public, because then they make sure that every part of their business is performing, and they are fiscally disciplined, and that the ROI is there, and everything that they do is to increase shareholder value, right? End of the day, that's the business we are in, right? You could, we have to delight the users, obviously, because they are the end customers, but we also have another user, which is your shareholder, and maximizing shareholder value, end of the day is what creates legendary companies over the years. And I think this learning of these startups going public is, I think, immensely useful for the whole ecosystem.
Is also useful for VCs, because one of the problems that we've seen play out, and I think many are now publicly acknowledging it, that too much money has actually been one of the big causes of the toxic culture and the toxic environment that we saw being created as well. So is there a learning that VCs are taking away from the way that public markets are treating these companies as well?
No, absolutely. I think and all the VCs are asking the right questions now. Right? You cannot just go burn money and grow and then nobody cares. I think everybody has thinking has evolved, and there's a public, market, examples of Zomatos of the world who have grown immensely and also are growing profitably. I think so. If a lot of these companies can do it, that means that can be done. Right? It's no longer a dream that, okay, let's keep growing and then we'll figure about unit economics much later. That doesn't happen anymore. And I think that's a great development for India. I think the kind of company that we see now getting built and the discipline that we see in the founders is so heartwarming for me, I think, to look at.
And discipline in the investors as well?
I think so. I think it works hand in hand, right? If we are backing these companies and we look at how they think about building businesses in a very fiscally disciplined manner, that's great for us too, because I think for the end of the day, that also is capital preservation for us. Yeah.
Well, speaking about the environment, we've gone through a fairly prolonged period of a funding sort of pause, winter, whatever you'd like to call it. We've now seen the Fed act delivering a 50 basis point cut. The expectation and the hope is that people who were sitting on a lot of dry powder may start to put that to use much more willingly. Is that the sense that you get as well?
I think, it's still early days, I would say. I think one cut is not going to really move the needle. A lot of things have to happen in the ecosystem to really make progress there. I think the IPO markets have not really opened up in a big way in the US, so I think that has to happen, right? So I agree with you that it's a good, welcome thing, but it has to be followed up with a lot of other things to really, open up the whole market. I think that will take some time.
Well, speaking of opening up markets, you're one of the investors, entrepreneurs who's decided to open up the US market to cricket. We saw that very successful World Cup here in the US. I mean, that was a big sort of bet as well, that you could bring cricket here to America.
I think cricket has always been a huge passion of mine. I used to play when I was growing up, and every kid, which kid doesn't play cricket growing up in India, right?
Yeah.
So when I moved to the US 15 years back, I always had this dream that cricket will one day become a real sport in the US. And we watch it a lot on TV here, and we once in a while go to real games internationally. But to dream about having cricket games in the US played by international countries with their best players and having a league of her own was a huge dream. And I think that's coming together. And I'm thrilled that, you know, we are able to build a sport from scratch and really introduce it to like everybody in the US.
It's the Valley playing on the front foot, right? I mean, Satya, Shantanu, you, and a whole bunch of other folks.
I think that's something which we, you know, collectively really believe in, right? If you really look at it, right? Cricket is part of our DNA, right? You cannot take it out of us, right? So if all of these folks that you talked about grew up watching cricket, playing cricket, and you know, loving the game, we want to make sure that, you know, the US gets a flavor of it too, right? So I think that's our little effort in making sure that we you know, give it a kickstart and empower a lot of kids here to get introduced to the sport. And hopefully, I think one day it'll become like a real, you know, sport that everybody is interested in.
So what's the bet? 5 years down, what do you think?
Difficult to say. It's still early days. I think it's year 2 of the league. So all these things take time, I think, but we are thrilled with the start that it's got, right? So,
you know, coming back to GC and you know, what the road ahead looks like now, we're almost closing out 2024. You know, what's the prognosis for 2025? Do you expect it to be a better year or, you know, tepid? What's the view?
I think I'm a very optimistic guy. So I believe, you know, the Indian startup ecosystem will keep thriving and growing, and we'll have a lot more companies that will build amazing products and you know, be funded by a GC and other VCs. And a lot of the companies that have been built over the last decade will go public, and you know, that will also spur the whole ecosystem, right? Going public is not only about providing liquidity to the you know, the team and the management and the VCs. It's also about enabling hundreds of more entrepreneurs to go start their own companies. Right? So I see it as a catalyst more than anything else for the whole ecosystem, right? And GC and I want to be a big part of that, you know, that story, that we are playing a part, a real part in catalyzing the startup ecosystem and taking it to the next level. Right?
So what does that mean in terms of the kind of allocation that you intend to make for India? I would imagine that with Venture Highway and GC coming together and with the Venture Highway expertise in India and more feet on the street, literally, what is it going to mean in terms of investments?
So we're definitely looking to expand our team. I think that's our you know, that's the only way we can actually scale investing in India. We have to have people in India who are working with startups day in and day out and helping them build the companies that they want to build, right? So it's important for us to scale the team in India. We will keep investing in all the areas that we just spoke about. And I think allocations are something which, you know, we are still working on. We think India will be a big part of investing for GC globally. And, you know, all the sectors that we talked about need real money, right? And if you look at GC and where we invest from seed all the way to pre-IPO, right? So if you're doing a lot of investing at different stages of company building, start right from creating a company to seed funding it to pre-IPO, you need a real capital, and I think we are prepared. We are prepared with the capital.
So what is the current portfolio size in India between venture and GC combined?
So I think for the new set of investing that we're doing, starting with Zepto as our first announcement, I think we will have close to $500 million to $1 billion to invest in the next cycle of investing in India.
Well, Neeraj, we hope you continue to give wings to many more ideas and many more entrepreneurs, and of course build on your own entrepreneurial dream and story as well. It's always a pleasure to speak with you. Thanks so much for joining us, and once again, congratulations on the deal with GC.
Thank you, Shereen. Always a pleasure to talk to you.
Thanks very much. And with that, it is time for us to take a break here on this edition of Young Turks. We will be back, same time, same place. From all of us here, for now, goodbye and many thanks for watching.